Welcome to the Unfettered Wealth Podcast with Eric Tashlein from Connecticut Capital. In this podcast, we help business owners and successful professionals plan for better wealth outcomes. Join us for this journey where we explore ways to help you identify better wealth decisions to help you achieve an unfettered life. It's time to ask yourself, what do you want more of?
Hello and welcome to Unfettered Wealth with Eric Tashlein. Hello, Eric. How are you?
Hey, good, Eric. How you doing?
Doing fantastic. I'm looking forward to this podcast. We talked a little bit about what this subject was on our last podcast. And just to remind those that maybe are joining us for the very first time, the last podcast, Eric really broke down what it looks like to do some half-year financial check-ins and just kind of what people should be looking at halfway through the year and really just kind of be thinking about throughout the year as they're moving along. So if you haven't heard that, please go back and listen to that one. But this podcast is about what to do with a sudden influx of wealth. And it's an interesting question, Eric. Why are we talking about this today?
Sure. Well, it's something that I hope happens to everybody that listens to this broadcast. But I think it's so important because it's during those times when you receive, in some cases, a very large amount of money that you want to pause and kind of think about what am I going to do with this? How much of it am I going to spend? And actually, how much is going to be left after taxes? So it can definitely be an emotional time depending on how you receive the money.
Yeah, absolutely. And that's a great question that we'll cover in just a moment. But before you talk about that, let me ask you this. When you're talking about an influx of wealth, how much are we talking here? Because, I mean, between me, you, and the tree, if I find $20 on the ground, I'm pretty ecstatic. Just, if I find $5 on the ground, I'm thinking that's a Subway sandwich. I mean, not promoting Subway, but that's a great opportunity for me to have an extra $5. But when you say influx of wealth, what are we talking here?
Sure. So I think it just really depends on the situation. But I think any amount of money coming in, unless it's, certainly greater than $20, I think you need to do some planning. Yeah. And depending on what's happened and what's occurred in your life.
Gotcha. And that leads me right to that next question. You said it can be emotional. Obviously, if there's a death in the family and it's inheritance, there's a lot of emotion tied with that, and how you receive the money as far as whether you inherited stock or you inherited whatever it is, collectibles, things like that, that can have a lot of emotional tie in that situation. But what situations would you kind of outline as far as an influx of money? What other ways are there?
Sure. So definitely the big four. I think, out of those four, widowhood definitely is the most complex and certainly, the toughest to go through. The other three are the sale of the business, which we've talked about in the past. We definitely can be emotional for sure for certain people, especially those owners that have a big driver personality. Inheritance as well. You receive these money from a loved one, maybe it's a parent or a grandparent, and there's certain expectations that come with that money. And lastly, the windfall, the lottery winner. And again, we've all read those stories where oftentimes, unfortunately, that money doesn't last very long. Yeah,
and that's just... I just can't believe those stories sometimes. I just get so frustrated. I'm like, oh, what were you thinking? You didn't need a solid gold toilet. I mean, there's just no resale value on that. Well, maybe a little bit. Okay. But so when you've dealt with this with clients, when you've dealt with this, I'm sure that there's a whole array of situations where people have come into money. Sure. I think one of the first questions that we ask, and my wife and I have done this before, I think everybody listening to this podcast, if they're married or have a partner of some kind, have talked about, hey, what would we do if we won the big one, right? If we won the $500 million Powerball, or even if I won $1 million from Powerball, what would we do? And that kind of leads to the question, how much can I spend, right? I mean, we want to make sure that, family's taken care of and, maybe college educations are paid for, but, we kind of want to spend some money too, right?
Sure. So everybody's different, right? I mean, prior to receiving this money, you had a certain level of spending. And for some folks, even if they receive a large amount, they don't necessarily upgrade their life very much. Others go probably way over the top. And so I think it's just coming up with a middle ground for the person that's receiving money is really important. You don't want to end up like some of the professional athletes that you read about who made millions during their career and end up bankrupt. Yeah. So, but it can be fun. And part of it can be buying a new house. Maybe you can afford a new boat. And in some cases, you may end up giving to others, for college. Maybe you have a loved one that has some debt you want to take care of. And then there's those landmines along the way, right? So if you receive a lot of money, trying to stay away from maybe those financially motivated, quote unquote, friends in your life that will eventually drain all your assets.
Yeah. And that just takes me right back to MC Hammer. Just God bless him, but doggone it all. He had his entourage, and I just remember there was a big write-up of how much he was paying all these different people just to be his entourage. I'm like, man, it was generous, but it ruined him financially for quite some time. I don't know how he's doing now. I wish him the best. But I just remember, hearing about that specific situation as I was growing up and as I got older, which begs the question, why wouldn't he have had a good financial advisor walking with him? So how can a financial professional help guide this process?
Sure. So I think it's really important. I mean, we've spoken about this in the past. I'm like huge believer in teams. And so I think having a good CPA, a good attorney, a good financial planner in a room with you to try to go over different scenarios. And like you talked about earlier, how much can you spend? Well, are there taxes involved? Depending on the type of money you've received, sometimes there's income tax, sometimes there's not. And so your team can help you through that. In Connecticut here, I think it was 4 or 5 years ago, there was a massive winner of a lottery payment. And I don't believe we ever learned who that recipient was because they had a lawyer sit in on the meeting, on the press conference. And I believe there was a way that the payout was structured to really protect that person's identity. So I think there's many things you can do as part of the process to really give you the best chance of succeeding over the very long term.
Yeah. And I know that when it comes to wills and receiving the money in an inheritance type of situation, a lot of times things go to probate. And I know we don't want to dive too deep into legal issues, but from my understanding, when something goes to probate, it is public. And so the public can know. You have scammers out there that are, I'm sure that they're, looking for those things, looking for those announcements, looking for the public information so that they can do what they do best, which is lie to people and try to scam them out of money. So, that's definitely something to consider. If you, as a listener, have some money that you want to leave to a family member, there are certain things that you need to be talking to your advisor about, which again, as part of a team, they should have an attorney in their Rolodex. That's an old term there, right? Rolodex. But they should have those team members in place to help you make the best of your situation and keep the safety of your family, as a priority.
Sure. I think it just, sorting through the options. And we've had situations with family members that had their hands out, right? They became aware of inheritance or success in a business, and the hands come out and the pressure comes on. And we tell clients all the time, listen, use us as the bad guy, as an intermediary. Just say, listen, I spoke to my financial planner or advisor, and they are saying we can't do this. So we don't mind taking on that role at all.
Yeah. And I think that more people need to take advantage of that because it's something where the best of intentions can really lead to some serious problems. And just as an example, Eric, you and I have talked about my wife and I's past working with Boys Town and working with at-risk youth there. Well, we had one young man that lived with us. His parents were very wealthy, and one of their biggest downfalls was they would just throw money at him as kind of trying to quote unquote help him, but he developed so many issues, drugs and just the fact that he didn't respect money, and just destroyed, $100,000 boats just on the kind of a whim on oops, and didn't have it insured and oops. And it just really led to his ruin. And it's no parent wants their child to go through that, but they just don't know how to plan effectively to make sure that they're wise and safe with the money that they're trying to leave them.
Yeah, I think that's probably the biggest challenge, right? And as much planning as you do, you can't sometimes prevent those situations. So that's really sad to hear, and I'm sorry about that. I think a good estate plan can alleviate some of that. I think having, sitting down with reasonable family members and maybe coming up with a family mission statement and value statement about, hey, there is this money beyond us maybe helping you with buying your first home and helping with the grandchildren's college. If there's that much money, I think you really need to have conversations with your children about that. Just because I think there's an old saying in many cultures, shirt sleeves to shirt sleeves in 3 generations.
Yeah.
And you have that generation that maybe works hard and earns it in the business owner situation, or maybe your second generation and you've inherited it. Generally, by that next generation, the money's gone.
Yeah.
And I think without setting a bigger, higher goal or a bigger picture for the family, that's bound to happen. And that's part of the estate planning and financial planning process for sure.
Yeah. And I know you personally have those conversations with your clients because it's that important. And again, you said it earlier, you don't mind being the bad guy. And sometimes that's what it takes, because as parents, we don't necessarily like to say no to our children, or especially in my wife's case, no to the grandchildren.
Sure.
But those are boundaries that have to be put in place, and being able to lean on somebody who is much wiser and more learned in finances, like yourself, that's so vitally important. I know we don't want to focus just on that specific issue, but how do you help families with their short-term, medium, and long-term planning when it comes to any type of windfall?
Sure. So I think first things first, I think if you receive a large sum of money or even a smaller sum of money, I think it's not a bad idea just to park it short term and bring in that team that we spoke about. Talk to your attorney, CPA, advisor, preferably in one room, and state your goals and bring in your information so that we all are on the same page. So we understand what are the tax implications, how much is going to be left when you're done, and what's the best money to access when you start taking it. So I would say short term, oftentimes, we're looking at, is there debt, with the inheritor? And if so, certain debt's okay, but other debt like credit card debt, something we'd want to address. And then from there, figuring out, does it make sense to pay off a home if we're talking about larger sums of money? And then, and beyond that, in the medium term planning, is somebody going to be going to college in 4 to 5 years? And then longer term, hopefully, if you're in your 50s or 60s, you end up living 30 years, and that money can help support you. And so that's part of the longer term planning. I think ultimately having an asset allocation done for those 3 stages makes sense, right? Usually cash or equivalents for the very short term, and then maybe over time blending in some bonds and stock and some other alternative investments for those longer term investments to create some income for you and for hopefully the next generations.
Yeah, and that's... Again, I think that any parent or grandparent out there would love to be able to do that and successfully set up their grandchildren and great-grandchildren, hopefully. Hopefully that 3-generation thing doesn't come to fruition for each group. And I think a lot of it goes back to being able to understand those family values and kind of the mission statement that you were talking about earlier. I'd like to go back to that. Is that okay?
Oh, sure.
So how do you have those conversations whether it's a windfall or just a family that maybe, well, I guess the windfall, one of the ones you spoke about was selling a business. If you've got business owners that are selling and maybe the children are not going to be involved, maybe they've got their own careers, how do you start those conversations to be able to help guide them just to make a safe environment for whatever finances are going to be coming down the pipe in the next 10, 20, 30, 50 years?
Sure. So in some cases, the business owner's retaining the business, and children are going to go in to inherit the business in some cases. And I think the challenge that we see oftentimes is that the old school business owner, I'll throw myself in that category, is not willing really to take suggestions from that younger generation because they're still the kid,
Yeah.
right? And so I think it's really important if you've retained the business and the inheritance will be the business, that having those conversations early, allowing those children to make some of their mistakes as part of the transition of that business is important. If the business is sold, that's another conversation, right? Because we're talking liquid assets for the most part. Sometimes the buildings are retained and there's income from there. But again, it depends on the dollar figure. If the business is sold and there's $1 million, well, maybe monies won't be there for 3 or 4 generations. But if it's sold and it's much greater, then I think you get into, I think Warren Buffett had spoken about that, just leaving enough so that the child is industrious. And then maybe you're above and beyond that, you're talking about a family trust or foundation that benefits the town that they're in or some of the causes that they believe in. And so I just think it depends on the dollar amount, one, and the goals of the family. And I think sitting down together to come up with a statement makes a lot of sense.
Yeah, absolutely. And that touches on philanthropy, right? I mean,
Yes.
we've had podcasts and spoken about it before as far as what your beliefs are and kind of how you help your clients navigate through that. And again, you have a team that you bring on board because there are all sorts of tax advantages and all sorts of things to consider when you're talking about philanthropy or a trust or a foundation. That can be quite daunting, but you have the team in place to help them. So that's fantastic.
Yeah, one thing I was going to interject, I have a daughter in high school that'll be going to college next year. And, a couple of things we're doing and not that we're going to be leaving this, massive multi-generational wealth, but someday when we're gone, we're figuring she'll have some assets. The thought being is that I said to her, I was like, listen, she's probably going to get involved with psychology or social work. I'm like, listen, each year she will take out a student loan, and as long as her grades are good and she takes at least one finance course, then, we're going to do our best to pay off that loan when she's done with school. So I think setting up that next generation through, with some education along the way is really important. And I think it'll lead to better outcomes later on in life when you're gone.
Oh yeah. I mean, you're also teaching goal setting, right? I mean,
sure.
These are the things that you want to see her put in place. You're not telling her what to study. You're not telling her what to do with her life. You're just saying, hey, your choice is great. Here's some things that we want you to consider. And if you're willing to do this and complete the goals that you are setting for yourself, then this is kind of the reward or the carrot at the end of that journey. And I think that more families need to do that and have some expectations of that younger generation, because without them, then there's just the expectation from the younger generation is that they're just going to get the money, right? And that can be just disastrous. So, yeah.
Yeah, and I think just getting them comfortable with money. I mean, the other thing we did, my daughter works at the office here part-time, and so each year we make sure that she puts a little bit into like a Roth IRA as an example. And then from there, we'll have a family discussion on, hey, well, what are 3 or 4 stocks that are important as part of your life? And I'll come up with a list of 10, and she'll end up choosing 3 or 4 just to get those children in the habit of being comfortable with investments in the market and so forth.
Yeah, fantastic. I know that this wasn't going to be a super long podcast today, but is there anything else that the audience needs to kind of hear around this subject?
I would say probably the most important thing is, sit down with your team, probably redo some of your estate planning for sure, because we don't want these shirt sleeves to happen in 2 or 3 generations. Yeah. And that's it. I think just take your time, take a pause, especially in the event of, a situation where you've become a widower. And I think taking a pause there makes a lot of sense. There's just a lot of emotion. It's draining. And until you emerge through that period, I don't think it's a good idea to make any drastic decisions.
Yeah. And I was thinking, as you were talking about that, I know that there's certain situations that we talked about today that might be sudden, where the sale of a business really isn't sudden. That's something that's planned for well in advance. So there's a lot more planning, and it's much easier to plan for that type of event than it is for a lottery win or maybe an inheritance that people weren't exactly aware of, or they weren't planning on. Maybe they, their parents had an insurance policy they weren't, aware of. So thinking about that real quick, I would think that some of the best advice would be for those clients of yours or those that are listening right now, if you have aging parents, having open conversations about what they have in place is probably a good idea. Number one, because they may have things in place that could be utilized better by them now to live a better lifestyle. Maybe they've got some policies or they've got some things, investments that they haven't looked at for a very long time. And being able to just have an open conversation to find out where they're at, it may improve their lifestyle. And secondly, being able to know what they've got in place, kind of what their plans are, having that conversation so that you're able to talk to your professional about, okay, mom and dad have said this, or, mom has said this. These are things that we need to plan for the future, because Eric, I know that you'd appreciate a heads up on, some possibilities so you can do some better planning with them.
Sure. No, it's funny that comes up quite often. And, baby boomer generation, by and large and older, really do not like talking about finances with the kids. Yep. And so when we're dealing with the children, we'll just say, listen, again, use us as the bad guy and just say, we're doing financial planning. We're trying to understand, college and so forth, and your retirement planning. And part of that is there a chance that the grandparents will help out in either of those? So again, it's not looking like here you are, the greedy child with your hand out. It's truly part of their financial plan, and they're using us again as that scapegoat, so they're not feeling uncomfortable.
Yeah, absolutely. And it's pretty easy to be able to talk to, well, I can't say it's easy. It was easy for us, but it was easy for us to talk to our parents about it, just because we need to know where the documents are in case something happens. So they did a lot of planning just to make sure that we were prepared if something were to happen. We're not talking about end of life, like old age type death, but in case, hit by the bus kind of scenario, where's all the paperwork? Where are the passwords? Where are the things that we need to know to be able to most effectively take care of the estate that is left behind? And I think that's just a basic conversation and a segue into a deeper conversation of what are parents' wishes, right, for their money? Do they have a will set up? Do they have certain things spelled out? Because if they have new grandkids or great grandkids that have happened within the past year or two, have they updated their wills and estate plan to include them? Do they want to include them? Maybe not. Who knows? But at least they'll have that option, and maybe that can spark the discussion to just help everybody be on the same page about what they truly want their legacy to be.
Absolutely.
Fantastic. All right, Eric, this is a great podcast. I wish and hope this applies to everybody listening, that there's just some sort of windfall in a positive way coming your way. If not, that's okay too. The finances that you have now, they could use another set of eyes on them. Eric, how can people get a hold of you if they want to just have a conversation?
Sure. So I would say go to the website. You can book a meeting there. Otherwise, give us a phone call if you'd like at 203-877-1520.
Perfect. Thank you again, Eric, for your time today.
Thank you, Eric. Appreciate it.
You bet. And again, the last thank you goes to you, the listening audience. Thank you so much for tuning in and listening to the Unfettered Wealth Podcast with Eric Tashlein. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Eric comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. And this is a great one to share with your parents, because maybe that'll get them thinking about, we do need to get this all out in the open and just talk about what we would like to have happen with the finances that we leave behind. Starts a great conversation, and Eric can also help with that conversation if needed. Again, thank you for listening today. For everyone at Connecticut Capital Management Group, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Unfettered Wealth Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Connecticut Capital. The content has been made available for informational and educational purposes only. Content should not be construed as personalized investment, legal, or tax advice. Please consult your advisor, attorney, or tax advisor in regards to your individual situation. Eric Tashlein is an investment advisory representative of Connecticut Capital Management Group, LLC, a registered investment advisor. Connecticut Capital Management Group, LLC, and Connecticut Benefits Group, LLC are not affiliated.